First, we thank all of you guys for joining us today. We've been wanting to do some type of market update for, a couple of years actually. We just couldn't figure out the best way to deliver it. And then this came about, and with everybody getting on Zoom and things now, it just kind of seemed like a natural progression. And then plus, we just wanted to touch base with all you guys and see how you're doing, see how your families are doing, jobs and all that stuff. So it's good to see you. Hoping we would have more people than this, but those of you that are here, we're happy to see you. We plan on doing this monthly. It's going to be very interesting over these next couple months when I show you some of these numbers, just to see what the market does over the next couple months and how the forecasting predictions and those things kind of pan out. Hopefully for the best for all of us, because I think all of us on here are pretty much small business owners or working with those types of people. So, um, we want to be your accurate, trusted resource for real estate. I didn't just pull these numbers we're going to show you out of our rear. Researched it all. Chris is obviously on the call with us, Madrid, with guaranteed rate mortgage. We've got Callie with Goosehead Insurance. She's going to share a little bit with us as well. So the way it's going to kind of go is I'm going to give a market update. Chris will talk mortgages. Amy's going to share a little bit. We'll let Callie talk about Goosehead Insurance, preparing for the spring, hail, all those storms. And then we're going to raffle a gift card off to the three of you that are here. You got a dang good chance of winning that. It'll help soothe Ron's Philadelphia Eagle quarterback problem. All right. I'm going to share my screen.
It's a low blow, Michael. It's a low blow.
Man, the guy played for my favorite team for a couple of years. I just don't know if he's a quarterback. He's a winner.
I don't know either, man. I'm just surprised we took him in the second round. But I'll let you guys get to business.
All right. I'm going to share my screen. Got a little PowerPoint for it. So. Maybe. Everybody see that? Guess. I can't see you. All right, so I'm going to go over home sales, home values, current inventory, and things of that nature. Hopefully. Maybe not. Okay. So national home sales, this is through the first quarter of 2020. And it's going to be compared to the first quarter of last year. So the National Association of Realtors, you can see that home sales nationally, seasonally adjusted for March, were down 8.5%. And from February, 1.2% above a year ago. So although they are down for this quarter, yes, they're down for the quarter, but they are up over a year ago for our national numbers. For the state of Texas, this information was pulled from Texas Association of Realtors. This is also in the first quarter, so this is the entire state of Texas. See, our median sales price was $241,500, which is up 5.1% compared to the first quarter of last year. The active listings in the first quarter were down 8.9% throughout the state. In the first quarter, there's currently 91,363 listings in the state. Days on market was 67, and days on market refers to the time when the listing goes active until the listing goes under contract. So you have 67 days from list to going under contract, and then you have another 34 days for closing. So that's a total of 101 days from list to close in the state. And that is first quarter numbers, and that is 1 day more than the same time in 2019. So we need to remember these numbers are drawing off the first quarter, and this really only, the pandemic, the numbers aren't going to show as much right now as they will. And we'll see that a little bit more here in a second. As far as closed sales in the state, they were up 7% in the first quarter over last year. And active listings, which is always months on inventory, which is always important, is only 3. And let's say a balanced market somewhere between 5 to 7 months of inventory. So in this instance, with it being 3, you would still see it as a seller's market. And like I said, it's going to be interesting to see if we continue on that trend. So this next slide is the DFW Metroplex. This is our MLS. So this covers all the way out west of Fort Worth, out to Greenville, up northwest, past Bonham and toward Paris. So it's quite a large area. And so you can see median sales price on the total entire MLS was $278,990, and that was up 5.3% compared to April of last year. Our active listings are down 10.8% in the first quarter compared to last year. So we have currently 27,624 active listings on our MLS. Days on market has been 22. So that number is unchanged. Remember that 34 number for days to close. You would tack that onto there. It's going to be very similar. So you're looking at 56 days to close. Closed sales in the entire MLS were down 23.2% in April over April of 2019. So closed sales were 7,957 in April of 2020, and there were over 10,000 in April of 2019. Our months of inventory is 2.9, so compared to 3.3 in April of 2019. So that tells me that people have pulled back on listing homes and things of that nature a little bit. Possibly, and probably not possibly, but builders have pulled back a little bit. And then this middle number is the one I think is most telling as of right now, because this is pending sales in April. In the entire MLS, it's down 39.4% as compared to this time last year. There's 7,014 pending sales. So that's a telling number, and I'm going to break it down now. We're going to look at Collin County. A lot of you are involved with that. You're in this market. So this is the market that probably really speaks to you. The median sales price in Collin County is nearly $350,000. That's up 3.5% compared to same time last year. Your active listings are down 21.9%. There are currently 3,765 active listings in Collin County. Days on market is 20. That's actually down. So that could mean one of two things. Some people have got out of their properties quickly, maybe anticipating what was coming. But days on market is down. That could also be homes are selling in those lower price points, your 200 to 300,000 versus your 350s and 450s up in the higher ranges. So those always have a lower days on market anyway. Go over here to the right. Our closed sales are down 23% in Collin County. There was 1,169 in April of 2020. So these numbers are basically from April. Months of inventory is 2.7, and that's down 25%. So another sign that sellers are pulling back a little bit to see what's happening. And then the most telling number for Collin County is active, the pending sales is down nearly 50% compared to April of last year. So for me, that was a very telling number. Denton County, Mr. Civic, this will probably interest you.
That's Maria too.
Maria is also Denton. So 315,000 is your medium sales price. That was unchanged from same time last year. Active listings down 17% from last year, 3,296 active listings in Denton County at the moment. Days on market down another 21, nearly 22%. And I would point probably also to the same reasons there, just your lower price point homes are selling quick. Active listings, closed sales were down 19% in Denton County in April, and they have a 2.5% inventory, down nearly 22%. And then once again, your pending sales at 1,023, down 33.7% in Denton. So our current market we're in, based on COVID, a lot of people have questions about, how does this compare now compared to the Great Recession that we went through? So I just wanted to give you, a few bits of things that I found over the time, over the last couple of days, listening to different economists and things. So first, the real estate industry started this market shift in a better place than we were at during that Great Recession. That deals with lending. Chris will get a little bit into that, I'm sure. But due to lending practices, more people have equity in their homes than they had during that Great Recession as far as the housing market goes. New construction startups and new home sales were very strong going into this shift in the first quarter. In the Great Recession, I believe the number, and Chris will be able to talk on this as well, I believe builders had nearly 2 million specs on the ground going into that. And currently, new construction has pulled back. I believe we're about 1 million homes underbuilt right now. So that's what results in that lower inventory. And it's probably going to also keep the market more steady. And this next bit of data is the housing values. Because the inventory is lower, because builders are not putting as many on the ground as they were in the previous recession, housing values should remain stable. What could affect that is when Chris talks about forbearance, people coming out of that and maybe not being able to handle the situation the banks put them under then. So housing inventory could possibly go up, and then that of course would make our values go down a little bit. And then the last thing is, this is pretty subjective. I don't know if the government ever learns many lessons. Being a history teacher, probably doesn't seem like it. But due to our lending practices and things of that nature, hopefully the government has learned some lessons from that last recession. Recovery, how is it being forecast? Everybody wants to kind of know where it's going. When is the market in general going to bounce back? Not just real estate, but so basically there's three things going into, hopefully I can get back to that. Okay. So they're looking at three things when they are looking at recovery. And then when we look at this graph in a second, we'll see probably the differences and what they come from. So first, there's the business science. How has the economy in similar slowdowns, what did it do? How quick did it bounce back? How did it bounce back? Those things. You've got health science involved in this forecasting. When is this pandemic going to be under control? Is it going to flare up again in the fall? Those things are being asked. And then there's just people science in general, social science, I would call it. After these businesses are fully operational and opening, how long is it going to take American consumers to get back out into the market and start doing what we do best, and that's consume. So going to the movies, attending sporting events, transportation, flying, those types of things. So chief economist from Freddie Mac, Sam Cater, says, although the uncertainty of the crisis means Forecasts of economic activity are more unclear than usual. We expect that the most economic damage from the virus will be contained in the first half of the year. Going forward, we should see a recovery starting in the second half of 2020. So, when and what it might look like. I pulled this chart. This is your Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, 4 of your large major financial institution, and, their projections for recovery. And, it looks scary, but it also, there's always hope in fear. So this first part, the down 4.8%. That is an estimate by the Bureau of Economics, which is a government committee that looks at economics. So you can go to bea.gov, see this information, but it's simply an analysis of what was going to happen in the first quarter. And then the rest is projections by Goldman Sachs, JP Morgan. So you can see they're projecting the second quarter to be down a lot. And Wells Fargo even is predicting that we're going to have a down third quarter, where your other institutions are predicting that it goes up. And then this is where I go back to the science of this forecast. How many people are going to stay quarantined even though businesses are open? Is the pandemic going to come back after we've got it under control somewhat? All of those things are, affected in this graph. But hopefully this gives you a little bit foresight of what's predicted. And the good thing is, we're already into this second quarter, getting well into it. So current needs that we have as real estate agents. So if you know anybody out there, we have sellers. I'm going to show you this quick video. This is a listing we have in Waxahachie. I'll let Amy talk to you a little bit about it. I don't know if the sound's going to come on or not. So with the current situation, we do video tours now. Some homeowners aren't showing homes, so we made this video to market this particular listing. The price is currently at $399,999, and the tax appraisal is $415. So we have it listed below tax value at the moment.
You want to videotape yourself in the mirror?
Did you like that, Madrid?
I loved it. That's great.
Tried to stay out. So if any of you know anybody looking in the Waxahachie area, that's a fabulous house. We also have buyers that are looking in the 340 range, anywhere in that mid-cities, Coppell, Louisville, Flower Mound, Colony area. We've got buyers that are looking in Oak Point, Prosper, Aubrey for 4 bedrooms in about the same price range, $340,000. We've got buyers looking in North Arlington, Mid-Cities, North Mansfield, $370,000 for 3 4 bedrooms. Another looking in Arlington, Mid-Cities, North Richland Hills in about the $220,000 range. The sellers of the home I just showed you is looking in the Allen Lovejoy area in about the 400,000 price point. So if you know anybody in those areas that might be looking to sell. And then lastly, we're always looking for off-market properties for flip and investor opportunities. If you've been stashing some cash away during this and you want to invest it in something better than the bank, we could always look at, working some flips and helping you make some money that way. So with that, does anybody have any particular questions? Just unmute yourself if you've got a question about any of that. If not, we're going to let Mr. Madrid talk to us about mortgage rates, if it is a good time to refinance, and then what all this forbearance means and what it could mean 4 to 5 months down the road. So, Chris, you can take over, please.
Yeah, absolutely. Hey, thanks so much for having me. It's always good to. This is the new normal, right? So it's always good to kind of be a part of this and kind of navigate the times that we're in. But yeah, it's kind of funny. You were going through the slideshow, and I was this is my 18th year in the business, so I was in lending whenever the recession happened, and it's interesting looking at kind of how the economy is now versus what it was then. And I remember being at work, and then obviously when all this stuff started, but even before that, I remember the type of lending that was going on back then, right? There was a lot of pay option arms. There was a lot of like stated income, stated assets, no income, no assets. I mean, looking back, it was almost like it was a free for all, right? If you had a 700 credit score and a pulse, you can get whatever loan amount you wanted, right? And that's simply not happening now, nor has it been happening for the last 10 years, right? So I think that's the big difference from an economic standpoint. The overall financial markets, what is happening now is again simply because people have been at home. Either they were furloughed, they got laid off, lost their jobs. It wasn't because of anything that the financial markets did from that perspective. So I think that's the biggest difference. This is really just kind of a pause in the economy where people aren't able to get out and shop and do restaurants and all that kind of stuff like they used to because of the I always say quarantine, but what's the new politically correct term? Whatever it is, shelter in place or whatever they call it these days. So I think that's the biggest difference, right? So I don't think it's a worry of, hey, are we going to have a repeat of 2009, 2010? This is a totally different thing that's happening, right? So that's one. Forbearance, it's something that has kind of been a hot topic. The biggest thing I can recommend, every servicer is different. So if you find yourself in a position where you were laid off or you got furloughed or something like that, and you are having an impact from an income standpoint, call your servicer, get the specific details about what it's going to look like in 90 days, in 6 months, in 9 months, right? Find out exactly the specifics to that forbearance, because I've heard from customers that had, and this is the only one, and it's not a knock on them. This was just specific to Bank of America about a month ago. They were allowing people to do a forbearance. So they said, yes, we'll do a 90-day forbearance. And then in 90 days, those 3 mortgage payments are coming due in full. So it's basically, they're essentially doing a balloon payment. So that doesn't help anybody, right? I mean, you're going to skip 3 payments just to have them all come due in 90 days. So again, get the specific details related to the forbearance. And then, 1 second. Yes. Okay, go on. Get the specific details related to the forbearance, just to know exactly what's going to be coming down the road. Initially, when this was all released, it's one of those things where obviously hindsight is always 20/20, right? The government thought they were doing something great and said, hey, we're just going to give some assistance to help people out. They didn't put any governing rules in place. They didn't put any stipulations that you had to prove hardship or something like that. So that's been the dilemma, is you've had people. Yes, you had people that legitimately did not need assistance that were that we're just calling to get the forbearance, right? So that becomes an issue for servicers obviously down the road. And then the biggest component to that is we don't know from a lending perspective, we don't know what issues it could cause from a liquidity standpoint in a year, in 2 years, in 5 years, in 10 years, right? And I think that's the most important component, is that is such an unknown that we don't know what kind of an impact this is going to have on the servicing industry from a mortgage perspective. So again, my advice there is call your servicer, find out exactly what's available, what they're offering, get more information, right? My biggest thing is education, right? I think and even, Michael and Amy and Kelly, and what we do is, we want to educate people, and then ultimately this is, the decision's yours. So find out what they're offering, get the specifics related to the forbearance, so that you're not put in an even worse, position in 3, 6, 9, 12 months. So that's the biggest thing. From an interest rate standpoint, interest rates are crazy low. We did see a little bit of a tick up this week, as obviously there's been partial openings in most places, restaurants and different things. There's a partial kind of opening of the economy. The way that I see it typically is, as things continue to improve, right? That's always better for the stock market. And when it comes to interest rates, in most cases they always work opposite of the stock market. So if you see the stock market going up, right, if you have money in the stocks and you start to see your balances increase, well, that typically means in most cases that interest rates are normally going up with it too, just because as things improve, things get more expensive. So here recently, what we saw, or what we've been able to see with keeping interest rates low, is because the Fed is purchasing mortgage-backed securities, right? This week they kind of let the foot off the pedal a little bit in their purchase of mortgage-backed securities. So we did see a little bit of a tick up, and they've kind of pulled back from their purchasing of mortgage-backed securities. And mortgage-backed securities are what happens whenever your loan basically gets bundled and sold on the secondary market. They turn it into a security, and that's how that's sold, right? So that's, from a value standpoint, we saw back in March, interest rates overnight literally went from like the mid threes up to about 4.5% to 5%, like overnight. So for like middle of March, for about 2.5 weeks, we weren't doing much of anything, just because from a refinance standpoint, if you were already at 4 or anywhere in that range from 4 to 5, there was no benefit, right? Why would you think to refinance unless you had to do a cash out or something like that? So there just wasn't a big benefit. And then we obviously there was some relief. The Fed stepped in, started their stimulus component of purchasing mortgage-backed securities, and obviously relieving the Fannie and Freddie and Ginnie from an investor standpoint. So that really helped in kind of bringing rates back down. So in general, mortgage rates right now, like a 30-year fix is still in the low mid threes. 15 years are down below 3%. So you're looking at high twos, right? 2.7, 2.8 is where I've seen 15-year fix. So it's essentially free, in my opinion. So if you're anywhere below 4%, I think one of the things that I talk about all the time is, if you look at interest rates over the last 50 years, like 8% is the average, right, over the last 50. So I mean, anything 4% or less is really, really good. But obviously the unknown is what's gonna happen, right, between now and the end of the year. So my opinion, it's an election year, so I would venture to say that rates stay kind of like they are right now. We'll see some moderate increases, some moderate decreases, but I would imagine they'll stay in these kind of in the threes, mid to low threes, where we're at throughout the rest of the year. Obviously, if anything catastrophic happens in the market or the economy, that could obviously change. But it's a really, really good time if you're 4.5% or above. It's a really good time to look at an option to refinance, whether you're going from a 30 down to a 25, 20, or 15, or if you're pulling some cash out to consolidate and pay off debt. I mean, there's just a ton of opportunities to take advantage of that right now, while interest rates are still low, right? So that's always a good thing. Eliminating debt's one of the kind of the hot topics right now. Cash flow, right? Especially if you've kind of found yourself in a position where things have kind of tightened up a little bit. If you can pay off high balance credit cards, high interest credit cards, stuff like that. With the equity that's in your home, you have a fixed payment at a lower rate. It's tax deductible, all that good stuff. So those are the biggest things that we're looking at right now. I offer a free mortgage analysis just to kind of look and see where you're at, if it's beneficial. If it's not, I'm the first one to say, hey, stay where you're at. Maybe do these two or three things to pay off debt prior to, versus spending the closing costs or whatever it is to do an actual refinance. So there's no charge. You can give me a call at any time. We can have a conversation. There's no cost to do that. See if it's beneficial or if it's better for you to stay put. So I think that was my mortgage minute. Yeah. So again, the biggest things I think from a servicing standpoint, from a payment standpoint, back to forbearance, there's no financial benefit, right? There's nothing to gain from doing the forbearance. If you need it, call, take advantage of it. If you don't, right? That's my opinion. We don't have any clue the ramifications that this is going to have down the road for mortgage servicing. And ultimately that's, where we make our mortgage payments too. So anyway, that's my piece.
Appreciate you, brother. Thank you.
Yeah, absolutely.
So just basically call your servicer if you're in forbearance or looking at it, see what your conditions going to be when it comes out.
Yep.
And as far as refinancing, if you're at 4.5 and above, it's worth at least giving you a call to look at it.
Yeah, let's have a conversation for sure.
So if you would like to have a conversation with Chris, reach out to Amy or I. We can pass this information along to you so you can look at that. All right. Thank you, Chris. Going to let Amy share a little bit on property taxes and things of that nature.
The property tax appraisals, they're starting to come out, and if any of you, or if you have friends or family also that need us to run comps to see if we can dispute, let us know. We can definitely help with that. Also, with us being realtors, we're considered independent contractors. So the Texas Association of Realtors and the National Association of Realtors has really kept us up to date on what loans are out there for self-employed people. There's a payroll protection loan or a disaster loan, and then of course unemployment. And so if you or you have friends and family that are dealing with this, and we can help in any way, because I have a lot of information that they've given to us on it, and I've also spoken to several people that are dealing with that. So if there's anything that we can do to help with that, please let us know. Also, just to let you know that, we do have preferred vendors that we work with quite a bit. General contractors, plumbers, electricians, lawn people. Just anytime you need help with that, please reach out to us. And again, if you have friends or family that need that, we are here to help. Because the main thing is we always want to be helpful and useful to you guys. And so please reach out. We'd like to be there for you.
All right. And Callie.
Hello, can you hear me okay?
Hey,
can you hear me okay?
Doing
Hi.
good. Callie's going to...
I haven't...
Huh?
Oh, I'm sorry. Did I just lose you? Can you guys hear me okay?
Yeah. I can hear you now.
Yeah.
Good. Okay. Hey, I haven't met most of you.
Nice to meet you.
Nice to meet you.
So, Callie, can you share just a little bit what homeowners should, kind of be looking for in the spring, going into summer, as far as, being covered insurance-wise?
Yeah, insurance has remained largely unchanged, luckily. A lot of things going into the spring for new home-time buyers. This is the case a lot of the time, but I'm seeing more and more inspections come back with some issues with the roof when we send an inspector out, which happens for every insurance company, no matter who you're with. They will send out an insurance inspector to take a look at the roof. A lot of times it's all they care about is just if there's a couple shingles missing. They will, oh, sorry guys, it's getting a call. That they just want a couple shingles fixed. So if you see that on an inspection when the client's going through closing, might just be an easy thing to tack on. Just a couple shingles, because that's kind of an easy way for them to it's an easy thing to see when they send the drone above the roof. Other than that, same advice. I'm a broker. I own an independent brokerage, so I'm able to shop over 30 different carriers for homeowners insurance. And my biggest advice is always just to shop. Know what your options are. You can get 4 quotes, and that 5th one is the gimme. Way better premium with way better coverage. So having a broker is always my advice, and someone that you trust. And then, I'm sorry, one kind of unrelated, but still relevant to your wallet advice. This is kind of personal advice as well. A lot of companies, or almost all of them now, are offering some money back on at least the past 2 months for auto insurance. So if you're not seeing that refund back on your statements, maybe reach out to your carrier, check your mailbox. It may have come as a check. Homeowners insurance probably will continue to creep up price-wise with all of the storms that we keep having. But that may be negated by auto prices here in the next little bit when things start to renew. We're not driving as much. I've probably filed 50% less claims than I normally do for my clients over the past few months. We're just not going anywhere. So that may be one thing to look forward to on the insurance side.
Okay.
Are
Awesome.
there any,
Yeah,
do you
sorry,
have
guys.
any insurance related questions? Maybe anything that's come up recently? One thing I should mention, seeing flood insurance being required more and more often for homeowners, and that's always kind of a bummer when they find that out, and it's an extra $1,000 or so due at closing.
Mhm.
A lot of
Yeah.
agents will not tell you, and I'm seeing more and more of them. I think FEMA's changed their flood zones recently. A lot of people do not know, a lot of times you can change the seller's flood insurance policy to the buyer's name at no cost. Now the seller won't get their money back on the policy, but if sometimes that's make or break a deal. If it's $1,000, $1,500 extra to close, there's that option. And then for some loans, you can get private flood insurance, which a lot of times is a lot cheaper. We have 3 or 4 private flood carriers. So if you have anyone that runs into that issue, feel free to give me a call.
Awesome. Yeah, and I apologize. I should have made an introduction. Callie's actually my preferred insurance broker that I use for my clients. Very knowledgeable. The biggest thing from my perspective is she's honest, right? She'll say, hey, this is a great policy, or you should maybe stick with where you're at now. Most people don't know that they can actually shop their insurance every single year, right?
Mm-hmm.
So if you purchased a home last year, 2 years ago, 5 years ago, oftentimes you're seeing that premium kind of, creep up, and it doesn't have to be the case. You can actually shop your insurance every single year around renewal time, and that's a free phone call to Kelly, and she'll give you great advice and whether or not it's beneficial or not. So I know I appreciate that for sure.
Thank you.
Callie, I have a question for you. Should current homeowners check their current insurance policies to see if they need flood insurance?
It is so no homeowner's policy, no matter who you're with, will ever cover flood insurance, flood from rising waters. That's always a separate policy, as you probably know. If they're not required to have one by their lender, then they will not be in a 100-year floodplain. It will either they'll be in a 200, 300, 500. Now, I have insured homes in Houston that are not in a FEMA flood zone that have flooded 3 times. So sometimes their zones don't make a whole lot of sense. If you are in a standard floodplain where you are not required to have that insurance for your mortgage, we have private flood carriers that can do that for about $300 a year. So as the weather gets crazier and crazier, I offer it to every single client, just so they know that it just doesn't, a lot of people don't realize it doesn't come on their homeowner's policy. If it's in the budget, I recommend it, just because you never know with what keeps happening.
All right, appreciate that. So we've got our three participants' names on Post-it notes.
You're wrong.
Ron, this is for a $50 gift card. I'm going to throw them on the computer twice, 3 times. All right, we'll let Amy pick one up.
Da, 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 da. Ron!
Oh, no way. No way.
Nice, David.
Congratulations, Ron. Congratulations.
Thanks.
Back to you.
We'll get that over to you, buddy.
Sounds
So if does anybody have any questions for Chris, Callie, Amy, or I?
No, Chris,
Well,
I'll be
we hope
reaching
you-
out. Just we're closer to, like, I think we're 437 or something like that, and we've got some equity. So I just want to kind of look and play with some numbers and see where we can go and see if it makes sense. But just not sure what we want to do. So I'll reach out to you.
Absolutely. Sounds good.
And then Michael, I need you
We're
to find me better comps, dude. I can't be paying, X amount of money in property taxes with those comps going on.
Oh my gosh. Yeah, it's been a
All right.
year
See what
for
I can
sure.
do.
Yeah, it seems like everybody that I know that purchased last year, they got a bit of a surprise this year with their property taxes. So, and it's one of those things. You can always dispute the value. Obviously, you
For
need to
sure.
have the data needed to be able to do that. But I would recommend, try to find as crappy comps as you can to make the value go down, because it's been, man, I've gotten call out of, I think since February, of, hey, can you just double check, make sure everything, and fortunately enough, everything was set up properly. It's because the county increased their value, their taxable value, and then now their payments $100 or $200 more a month. So I know I got it for mine personally. I've disputed mine for several years, and I'm well below below what it should be. So I'm just gonna leave it alone at this point. So I don't want to tempt the fates too much. But yeah, I mean, if you've only been in your home for 1, 2, 3 years, I think it's still worth disputing the value. Plus, let's just say that you haven't done any significant updates, you can always I think there's a way to get a lower taxable value based on like the condition of your home and indicating that there's been no recent updates. So the Oldhams could probably look into that for us.
Good to know.
All right. Well, we're going to wrap it up. Ron, appreciate you joining in. Maria.
Yeah, thanks for
Carrie,
having me.
Callie.
Yeah, thanks, guys.
It was nice to meet all of you.
You too, guys. Thanks.
Thank you for the
Stay safe.
information.
All right.
Bye.
Thank you.
Thank you.